It's 1:30 p.m. in Lagos, same time in London, and we're bringing you markets, insights, and analysis on Business Incorporated. Here's what's coming up on the program. IMF projects global growth to fall from 3.5% in 2022 to 3% in 2023 and 2024. Brics New Development Bank issues first South African rand bonds. Kenya tourism earnings rise 31% to $1 billion in 6 months. Hello and welcome to the program. I'm Will Ibang. Let's kick off with the markets. First up, major equities in Africa. We're at intraday. Major equities we're trading mostly with positive sentiments. We see the Nigeria's NGX up 0.31%, now back to the 65,000 level. Meanwhile, South Africa was down more than 1.3%, about 1.3%. And we see Egypt trading nearly 1% at intraday at 18,141 points. Kenya, however, closed Tuesday very well in the red. Now let's flip over to the Middle East and see how they performed at intraday. We see the Abu Dhabi index down 0.19%, is mostly red there. And Dubai's index is also down 0.13%. Let's see elsewhere. Saudi also, well, on the flip side, up 0.41%, and Qatari index down 0.09%. Now in the EU, the German government is working on new regulations for the solar energy market. Lars Alter is with Deutsche Welle in Berlin, and he has been following the story. Lars, what's the government planning this time?
Yeah, thanks for having me. Well, here's a term to put on the list for Germany's word of the year, the Balkonkraftwerk, a power plant for your balcony. They've been around for a while now, at least in terms of the technology being available. The idea is that more people should be able not only to consume, but to produce energy for their own use as well as to feed into the grid. So far, it was mostly homeowners who had that option, people owning a house and a roof to mount solar panels on. A lot of people have that in Germany, myself included, and you can see roofs covered with solar panels in cities as well as the countryside. But what about all those living in apartments with no access to a roof? Well, if you have at least a balcony, you're no longer excluded. Solar panels can be mounted outside the balcony and they're connected to the grid with a relatively small device. But the process was tedious in the past, and that's exactly what Berlin is about to change now. Much less bureaucracy, fewer forms to fill out, easier access to the grid and the option to monetize the energy produced. And that's all with one goal: to get a lot more people to participate.
But will these initiatives that Germany is trying to bring up really make a difference?
Well, it adds up for sure, but there are some other ideas being discussed as well, and one of the big ones is for farmers. Many of them already have large parts of their fields covered with solar panels. Sometimes you can see that from the Autobahn, from the German highway. Fields or meadows that aren't very attractive to farm on because they might be too close to traffic and exhaust fumes, or they might be too steep, or the soil might not be very fertile. Many such areas have long been farmed by solar farmers. Now a lot more areas will be officially designated as solar farmable. And since we're talking about a lot of acreage, this is a pretty important building block in the German government's energy strategy.
Well, what's the big picture here? Where is Germany going in terms of its energy policy? How are markets going to react?
It's been messy in the last few years. Germany has built up a pretty strong renewable energy supply, almost entirely on wind and solar, but it doesn't even remotely cover the country's energy demand. And maybe it could, had the government invested more and earlier. Instead, Germany relied on oil and gas for too long, especially on gas, and that became a real problem a year and a half ago after Russia began its war against Ukraine, and Germany put sanctions on Moscow, including ending all gas imports. imports. This dependency and the uncertainty over new energy sources was reflected in the markets too when German industrial shares took a dive in the early months of the war. They have recovered now and markets are looking strong, but there is still no satisfying solution to the energy problem. After all, Germany had to bring back some of its coal-fired power plants, and that is definitely not a great choice. But now with the Green Party, a junior partner in the government coalition, and with the economy minister actually from within the Green Party, there's this renewed push to switch to more renewable sources. By 2030, a full 80% of Germany's energy supply is supposed to come from green sources, and progress is actually being made. Last year, 7.3 gigawatt of solar energy were added to the grid, and that number has now already been topped for this year, and it's only August.
Thanks so much, Lars. Lars also there from Berlin for the updates. And now we head to the UK, where inflation has dropped for the second consecutive month to 6.8% in July from 7.9% in June. However, UK's leading progressive think tank, the Institute for Public Policy Research, IPPR, says although inflation has fallen, the UK faces a high risk of recession. Juliana Olayinka is in London with details on the latest development. Hi, Juliana. Inflation is decelerating, and that's a good thing. So where is the IPPR fear coming from?
Yeah, I've got to tell you that recession sentiment is very limited, and it's only the Institute for Public Policy Research that are stating it. But there have been a slew of economic updates out of the UK this week, and they're all leading to indications of what the Monetary Policy Committee will do when they meet at Threadneedle Street to decide interest rates next month. And we know that they've had a hawkish stance on interest rates because they're at a 15-month high of 5.5%. But I think if we take away the details we received from the ONS today about inflation, which quite rightly you said has dipped to 6.8%, this is the lowest level of inflation we've had since February 2022, before the Kremlin invaded Ukraine. However, this year alone, we know that inflation has been the dominant talking point. The Prime Minister did say at the beginning of the year that he wanted to bring it down from those double digits. However, something that's keeping inflation stubbornly high in the UK is wages. And yesterday, we did have some data from the labour market showing that wages are rising faster than the level of inflation. I believe wage growth, particularly in the private sector, was hovering around 8.5%. Now that inflation is down to 6.8%, that means there is more money in people's pockets, which means demand will go up. So that could keep inflation quite high. Also, as well, we know that mortgages and those who are suffering big loans have been really struggling with the high monthly repayments. So there are concerns that perhaps, even though on the one hand, inflation being down is a good thing, if interest rates keep rising and if, wage growth keeps rising, then that is going to maintain the level of inflation.
Interest rates will keep rising. The World Bank did say that inflation is set to rise further if this monetary policy banks keep, hiking interest rates. Inflation will definitely rise. Now, exactly. If the Bank of England does raise interest rates to 5.5% or 5.75%, which analysts are not ruling out, what will be the plight of mortgage payers? Because I think they're the ones we should be looking at the moment.
Absolutely. This is a huge issue concerning lots of people that are on fixed-rate mortgages. Lots of people have been switching between a 2-year fixed-rate mortgage and a 5-year fixed-rate mortgage. Any of our viewers watching in the UK who have a mortgage have probably seen over the past few months that their payments have risen significantly. In fact, I was speaking to one lady from the Nigerian community who quickly tried to get a new mortgage deal from her bank a couple of weeks ago, and her husband are now paying an extra £650 a month. That's the equivalent of about 700,000 naira, depending on the rate you look at. And for many people, that is just absolutely unaffordable. To be fair on the Chancellor Jeremy Hunt, he has tried his best to negotiate with banks to try and, loosen the squeeze on households that are struggling at the moment. I do do believe that you are able to extend the length of your mortgage so that payments may be reduced. Also, I believe there is some sort of protection in place so that you won't be evicted from your home. Unfortunately, the country is going through a cost of living crisis, but with the hike in interest rates, it's only a small minority of the country, probably less than 10%, that are having to cope with the burden. And unfortunately, it's just totally unaffordable for them. But with the labour market data yesterday, coupled with the CPI data today, it does indicate that next month the Bank of England will raise interest rates by 0.25% to about 5.75%.
It's very relatable here, Juliana. We did have that inflation number coming in yesterday in Nigeria, 24.08% from 22.79. Juliana, that's really high. That's a jump, a gallop. I don't know where we're headed, but we do hope that the central bank will wait to see what they do at the next monetary policy meeting. But how are markets reacting to the inflation data?
Not great, actually. In fact, the FTSE actually started off the day in the red. It maintains that position at intraday. The all-share is down 0.22%. FTSE 100 down at the similar rate of 0.22%. The FTSE 250 is trading flat at intraday. In the currencies market, the British pound is actually rallying against the US dollar. It's up by 0.31%. Also up against the euro at 0.21%. And the British pound is up against the Japanese yen by 0.33% at intraday, Will.
Thanks a lot, Juliana, for that update. And now we'll move over to other markets. In Asia, markets saw a sell-off early on Wednesday, mirroring moves on Wall Street after a decline in U.S. banks. Japan Nikkei 225 slid 1.46% to end at 31,766 points. That's the first time it has went below the 32,000 mark in over a month. South Korea's Kospi came from a public holiday, 1.76% down and closed at 2,525. In Australia, we've seen the S&P ASX 200 slipping 1.5% and notching its third day of losses in 4 days. Hong Kong's Hang Seng Index, however, we're seeing it also falling 1.3% in its final hour, while mainland Chinese markets were also lower. Now let's look at the news that came in this morning. China's Tencent missed earnings report expectations despite the fastest profits rise since late 2021. Now move over to the U.S., where stock futures were near flat in early trade on Wednesday as investors came off a losing session that marked the latest leg down in an August slump. Futures tied to the Dow Jones Industrial Average rose 0.03%, and S&P 500 futures, if we look on the screen, we see it's up 0.04%. Nasdaq futures, however, was slightly up at 0.13%. Now, these moves follow a losing session on Wall Street, with all three of the major indexes finishing more than 1% lower on Tuesday. But let's hear how that went down with our correspondent, Maria Bird.
The U.S. stock market was down on Tuesday after major global sell-offs due to the economic woes of China. The U.S. stock market also saw a decline as the Dow Jones was down by 1%. As the banking industry anticipates there will be stricter oversight over U.S. banking. The Nasdaq was down by 1.1%, and the S&P 500 was down by 1.2%. This has many investors concerned that the U.S. economy for the month of August could be seeing an upswing in the consumer purchasing, but the U.S. stock market has had some major challenges over the month of August.
Thanks, Maria. Now, global oil market prices held steady in trading early on Wednesday after a 1% drop in the previous sessions as markets weighed weak economic data from China, the world's biggest oil importer, against tightening U.S. crude supplies as well. Now, Brent crude futures rose 3 cents to $84.92 a barrel, while U.S. West Texas Intermediate crude rose 5 cents to $81.04 a barrel. Both benchmarks had weakened to their lowest since August the 8th on Tuesday. Now, also, U.S. crude stocks dropped by about 6.2 million barrels last week. And this is according to market sources, and that has also supported prices in early trade. Meanwhile, U.S. government data on inventories is due later on Wednesday. Next, a look at vaccine manufacturing in Africa. That conversation right after the break. Do stay with us. This is Business Incorporated. Welcome back. Now, last year, Nigeria's former President Muhammadu Buhari at the first World Bio Summit in 2022 in Seoul, South Africa, said Nigeria was ready to become a global hub for sustainable manufacturing and distribution of vaccines and biological pharmaceuticals. Several infectious diseases are fast ravaging countries of the world, especially Africa. And since the beginning of this year, 557 confirmed cases of diphtheria, new infection of the nose and throat, have been detected in Nigeria, affecting 21 states. It has become pertinent that the continent needs to scale up its vaccine production capacity. Oli Khan is the Director of Communications at Gavi, the Vaccine Alliance, and he joins me virtually from Geneva. Good afternoon, Mr. Khan. It's good to have you on the program. Can you hear me, Mr. Khan?
Yes, I can hear you very well. Can you hear me?
Yes, I can hear you loud and clear. Now, Nigeria, as we're saying, is set to be the regional hub for vaccine manufacturing, with plans, as I said, to launch a manufacturing plant in 2024. Why is this important? How can African countries become destinations for regional vaccine manufacturing? And also, which vaccines should Nigeria prioritize for its manufacturing plans instead of depending on imports for these, other foreign countries for their vaccines?
Absolutely. The time is absolutely right. The challenge we've had is we haven't been able to do anything up until now, but now there is a tremendous political will. And it's really important we capitalize on the energy, the momentum that is creating that. For example, former President Buhari's actions that he took in 2022. I mean, a couple of statistics just to kind of frame the situation we're in at the moment. There are roughly 1.3 billion vaccines demanded and used in Africa every year, and less than 1% of that supply originates in Africa itself. So, in the past, we've been, the world has focused on bringing down the cost. It's been tremendously successful at bringing down the cost of vaccines to the point where, we have been able to affect tremendous growth in the number of people, a number of children, adults that are covered with vaccinations. But now it's really the time to make sure that we have excellent geographical spread, regional diversification, so that when there is a need for vaccinations and a new supply, then every region is covered. There are no blind spots. We saw the tragedy that unfolded during COVID when the lack of indigenous African manufacturing meant that there were very few doses produced on the continent.
And so you talked about these diseases and the plans, all the steps or the strategies that are being deployed. But Gavi, the Vaccine Alliance, I know recently announced plans to deploy a 6-in-1 vaccine to low-income countries. What does this mean? What are the benefits of this vaccine? What challenges does it seek to provide as a solution for? What are we looking at here?
Well, look, we call it the hexavalent. It's 6 vaccines in one. That is diphtheria, tetanus, pertussis, which is whooping cough, it's hepatitis B, and it's influenza. We're adding polio to that. That was an important announcement and decision by our board in June 2023, and it's going to lead to more effective, more efficient vaccinations that will bring down costs essentially and make it easier for us to reach more children. For example, less visits to the health clinic, less costs in terms of storage and transportation. But that's just one indication and one example of the journey that we're going on as an immunization community in global health to make sure that no child or no adult where necessary gets left behind. In terms of Nigeria's own strategic planning, it's really important to, I'm going to use that word again, be very, very strategic. What we don't need is more vaccines of products that there is already an abundance of, and that is some categories. We saw a rush to produce vaccines for COVID-19, for example. That was tremendously important, but we were soon faced with an oversupply situation. There are other vaccines of which the world needs more, or they need better ones. So we're always looking for better qualities. This heat stability, for example, can we get more doses into a vial? Again, it brings down costs. There are some diseases and some viruses that we do not have enough vaccines for. So HPV, the human papillomavirus, that's one good example of that. Of course, we're seeing technology as well, and we're all aware that former President Buhari last year was talking and very active in helping establish Nigeria as an mRNA hub. This is a very exciting technological platform for vaccine production, and it will be a game changer in some emerging areas. And again, just lastly, unfortunately, we are facing a world where there are more outbreaks, whether it's yellow fever, whether it's cholera, whether it's Ebola. And for those, it's very, very difficult for us as a global community to plan a regular, stable supply, because we don't know what the demand is going to be. So we try to help where we can by creating stockpiles. But again, really, these are areas where there is not enough supply at the moment. And again, great opportunities for African manufacturers, including Nigeria, to take advantage. And Gavi, as a vaccine alliance, we're working with our partners at the Africa Union, Africa Centre for Disease Control, to make sure that this growth of the sector in Africa is strategic and as well planned as possible.
And this brings me to my next question here, very key, because Nigeria, as you mentioned, is home to the second largest number of zero-dose children worldwide. Data shows that about 2.2 million children in the country have not received any routine vaccination. You talked about the collaborations Gavi is having, but what more public-private health sector collaborations should we expect to address this issue?
You raise a very important point, Will. It's been a tremendous challenge for us. We've seen 2 decades of rapid growth and really great collaboration between global health partners and country health systems, including Nigeria, to raise that level of routine immunization, to bring up the number of children that are getting the vaccines. And by the way, when we started in 2000, we offered 4 vaccines. Now we offer over 20. So we've seen that great growth, but it's really, really hard to get the last mile, the hardest to reach children. And we estimate between 10 and 20% of children, depending on country, are what we call zero dose. They're not getting vaccines, or maybe they're getting 1 vaccine, but they're not getting a whole series. That's a huge problem, not just for immunization, but for health and also for development, because these people, they often don't have fixed addresses, they don't have identities, and therefore if we can find ways of reaching them through vaccination and immunization, we can actually help them get on the pathway to an education, to have an identity, and to lead a full and flourishing life. So really important for us. We're putting a lot of effort into it. We've launched in the past year a $500 million equity accelerator fund. That's dedicated cash to help countries reach those hard-to-reach children, and we're dispersing that, working with partners to get that money out as quickly as possible. You also mentioned the private sector. Some great collaborations here, and I think that's where one of the areas that we find most exciting is when you bring non-traditional partners into the room and get them around a table. Then you see really interesting things happening. So, for example, we're using drones to deliver vaccines to remote communities. We're using digital identity companies to help us identify and create an identity for these children. And we're using geospatial mapping techniques and technologies to map the communities and try to have a better understanding of where these people live. So lots to be done still. Lots of exciting progress there, Will, I'm very happy to say.
Thank you so much, Mr. Oli Khan, Director of Communications, Gavi, the Vaccine Alliance, for sharing your perspective and your thoughts and your insights on Business Incorporated. We do appreciate it.
Thank you so much.
And now moving on to other stories, we see that the International Monetary Fund has projected global growth to fall from an estimated 3.5% in 2022 to 3% in both 2023 and 2024, as rise in central bank policy rates to fight inflation continues to weigh on economic activity. Meanwhile, the global headline inflation is expected to fall from 8.7% in 2022 to 6.8% in 2023 and 5.2% in 2024, while underlying inflation is projected to decline more gradually. It adds that inflation could remain high and even rise if further shocks occur, such as the war in Ukraine intensifying and extreme weather disasters, which could trigger more restrictive monetary policy. The IMF advises central banks to remain focused on restoring price stability and strengthen financial supervision and risk monitoring. Now, the New Development Bank NDB, founded by the Brics countries, closed the auction for its first South African rand bonds. This move comes as the bank faces growing pressure to boost its local currency fundraising and lending. Auction results showed that the NDB 2 bonds, a 1 billion rand 5-year note and a 500 million rand 3-year note, attracted 2.67 billion rand of bids in total. According to the NDB's chief financial officer, the bank aims to increase local currency lending, most of which has so far been in the Chinese yuan, from about 22% to 30% by 2026. Meanwhile, the BRICS summit, whose members consist of Brazil, Russia, India, China, and South Africa, is scheduled to hold in Johannesburg next week. Now, Kenya's tourism earnings has risen by 31% in the first 6 months to June compared to a similar period last year, as the sector benefits from the ongoing global recovery. Data from the Kenya Tourism Board, KTB, shows that the sector booked 152.6 billion Kenyan shillings. That's about $1.06 billion from the period under review, up from 116.2 billion Kenyan shillings in 2022. The earnings improved as visitor arrivals grew to 847,810 from 642,861 arrivals in a similar period in 2022. Representing a 32% increase. International travel and tourism were among the hardest hit by COVID-19 and has been projected to rebound to pre-pandemic levels in 2023. And that's a wrap on Business Incorporated. Do join us tomorrow for another edition. I'm Will Ibang. Thanks for watching. See you tomorrow.